Okay, here's our first follow-up to the intro of investing in real estate. The biggest piece when you're investing in real estate is figuring out what strategy you're looking for. What is your strategy? What is your end game? Few different strategies. Talking to colleagues, California and Colorado, completely different strategies than what we have here in Boise. So a lot of it is what you're looking to gain. So I've got a Colorado colleague that we've talked a lot about this, and he does his real estate investing in the Midwest, where it is an extreme low cost of entry. And so for $40,000 or $50,000, he can put down on a house, get a loan, and then have somebody manage it, and it cash flows from day one. That is probably the lowest cost of entry, but in doing so, he's got to qualify for the loan. And he's has to have the additional income to warrant that. The downside is, and he knew this going into it. It was part of what he researched. Is there's little to no appreciation. National average is 5%. He's looking at maybe 1 or 2% on an annual basis. So that's what I call the Colorado method, because that was my Colorado colleague that does it this way. With $40,000 or $50,000 out of pocket, he gets a loan, has a rental company manage it, and it's cash flowing from almost day one. So that's his strategy. Another colleague in California, we've talked a lot about this. He has a different strategy, and his was an extreme high cost of entry, $1.8 million home. He's renting it for $4,000 a month, which just barely covers his expenses, if it does at all. It might even be a little upside down on a monthly basis. But what he's looking at is a much higher rate of return on his appreciation. So the longer he holds it, the more it's going to be worth. And so he's looking more at selling it down the road, and that's where he makes his money, is in the sale, not in the carrying.
So Aaron, why don't you tell us about the Boise method?
So the Boise, this is what we've done. We're in Boise, obviously, so we've invested here. And so I would say we have a medium cost of entry. So for $400,000, we bought a brand new home. It's going to produce good income from the beginning. So when you're talking a $400,000 purchase and $2,200 a month or $2,300 a month, you're talking 7% interest, right? And we will, in our market, see the average appreciation of 5% per year. So that means annually we're looking at roughly 12% return. So that is a better return than you're going to generally find in an investment. So that is our method, the Boise method. So there's the Colorado method, low cost, low appreciation, cash flow immediately. There's ours, which is a medium entry, good monthly return, and good appreciation. Then there's California, which is high cost of entry, high appreciation, little to maybe even upside down on the income. So, that is the first part, is deciding. And this isn't the only three. These aren't the only three strategies. There's more strategies, but you've got to decide your strategy. And part of that is who's going to manage it, and what do they charge? Here locally, I know you can get a management company 5 to 8%. Midwest, you can do lower. Obviously, in California, because everything's more expensive, it's going to be more expensive. So that's part of it as well. So look into, if you're going to do it, what's that encompass, and the cost of if you're going to have somebody else to do it. So this is the first one. If you've got questions, please reach out to us. We'd be happy to talk those through. Next time, we're going to talk a little bit more about the financing of it, and that can be a more detailed one. So we can talk more about where the money's coming from and how you're going to do it and what that means. So appreciate you guys watching. Thanks.